All right, let's get right to it. Where should you put your money? I'm Stick, and really, this huge question comes down to a simple trade-off. Individual stocks versus index funds. Today, we're going to decode this whole thing using what I call the stability equation.
Every single investment decision you'll ever make is an answer to this one question. Are you going for speed or are you going for stability? Are you trying to maximize how fast you can make a profit, or are you trying to protect your capital? Here's the kicker though. You can't have it all. You can't maximize both. You've got to pick one to prioritize.
So, think of it like this. Over on the left, you've got speed. That's your profit potential. It's like a high-performance rocket, unbelievably powerful, but man, is it volatile. And on the right, you have stability. This is all about playing defense, about mitigating risk. It's a much smoother, steadier journey. Every asset out there, every single one, falls somewhere along this line, trying to balance these two opposing forces.
Okay, let's dive into the first option, the one that puts all its chips on speed, the individual stock. And to really get our heads around this, let's use an analogy. Think of it as a single, high-speed drone.
So what is an individual stock, mechanically speaking? Well, it's pretty simple. It's a piece of ownership in one single company. That means every dollar you invest is riding on the performance of just one asset.
Now let's go back to that drone. Imagine your entire investment is this one incredibly advanced drone. It's built for one mission and one mission only: pure, unadulterated speed. When everything's working just right, it is absolutely unstoppable. It can deliver profits faster than you can even imagine. And that, right there, is the incredible appeal of picking a single stock.
But, and this is a huge but, here's the fatal flaw. The entire system has what we call a single point of failure. A minor technical glitch, a problem in the supply chain, a company missing its earnings report, any one of these things can cause an immediate, total malfunction. And the result? A catastrophic system crash. Your drone and your entire investment come spiraling down.
So, what's the alternative? Let's flip the script and look at the model that prioritizes stability, the index fund. For this, we're not thinking about a single drone anymore. We're thinking about a coordinated drone swarm.
An index fund is basically a basket that holds a whole collection of different assets. So instead of buying that one high-tech drone, you're investing in an entire fleet, a swarm of, say, the 500 largest companies in the US, all flying together in perfect formation.
Now, right away you'll notice this swarm moves slower than that single speed demon drone, and that's by design. See, its main goal isn't just raw velocity. It's about maintaining a stable, synchronized pattern. The whole system is built from the ground up for resilience.
And this is where the magic happens. This is diversification in action. So, what happens when one single drone in the swarm malfunctions? Let's say one company has a terrible quarter. Well, the system doesn't crash, not even close. As you can see, the other drones in the formation immediately adjust and compensate. The whole swarm keeps moving forward, and the disruption to the system is, well, it's barely even noticeable.
Okay, so we've covered the mechanics, but what does all this actually mean for your performance? And maybe even more important, what does it mean for your psychology as an investor? Let's connect the chart to the mind.
Look at this. It tells the whole story. The red line on the left, that's our single drone. It's just a chaotic mess of dizzying highs and stomach-turning crashes. But the green line on the right, that's the swarm. It's a much smoother, much steadier upward climb. Sure, it's slower, but the progress is incredibly consistent.
And this gets us to the most important point of all. Because while that single drone might look exciting on paper, the hard reality is most humans just can't handle that ride. The emotional stress of those massive drops is just too much. It's not a system built for a human operator.
So the real true advantage of the swarm, of the index fund, isn't just about math. It's about human behavior. The stability it provides acts like a filter against our own worst enemy, panic. It stops us from selling at the absolute worst time, and by doing that, it allows the simple, powerful, unstoppable math of long-term compounding to do its job.
Subscribe to Stick Market for more informative content.